Now we can begin right away, and we want to start our session by recapping on the previous lesson. And during our previous lesson, we had learned on the types of ledgers. And can someone remind us of some of the types of ledgers we learned the other time?
We have general ledger.
Yes, we have general ledgers. Thank you, Kemei. Who else?
We have sales ledger.
We also have sales ledger. Yeah, that is right. So those are some of the ledgers we discussed the other time. But today we are going to start a new topic, and our topic today is on depreciation. And we shall start by knowing the objective that we are going to learn by the end of this session. So our objective for today is that by the end of this session, the trainees should be able to define the term depreciation, and that is the first objectives. And the second objectives we are going to also learn the causes of depreciation. We have also we shall also see on the reasons for depreciation. Why do we provide for depreciation? And lastly, we are also going to have a look at some methods that are available for making or calculating the depreciation values. So those are some of the objectives that we shall we'll be going through one at a time. And to begin with, I want to say we want to discuss on the first objective. When we want to learn what do we understand by the term depreciation. Can someone define for us depreciation? Anyone class? Who can define for us the word depreciation?
Okay, let me try.
Yes.
And the situation whereby an asset starts to lose its original value and develop a second value.
Yes, that is right, Sang. And depreciation is where an asset loses its value with time due to some factors that causes that value, that assets or whatever to decrease in value. So that is a good definition. And the second objective is we want to see on the causes of depreciation. We have the causes. What causes this asset to depreciate in value? And who can give us examples of the causes of depreciation?
We have wear and tear.
Yes, we have wear and tear. Another one. Who else? Another depreciation. Yes, we have obsolescence. That is a situation where the assets get depleted with time. We also have the passage of time. So with time, as the asset is being used in business or in generating source of income, so with time, that particular assets decline in value. We also have inadequacy, where with time also with the new technology coming in and replaces the other one, the existing technology, then you find that the existing assets or the existing items of that resources in that business will going to diminish in value because of the new technology that has come in. We also have physical factors. Physical factors can also contribute like weather, like cold, like hot weather. Those are some of the contributing factors which causes depreciations of assets. Now we go to the third objectives. We see the reasons why we provide for depreciation. And there are some of the reasons as to why we have to. As you can see on the screen, those are some of the reasons why we, like number one of the reasons why we provide for depreciation is to spread the depreciable amount over the useful lifetime of that asset. And then another one is to match the income with the expenses, because depreciation has got to be factored in when you are preparing the income statement of every particular year, so that the net profit should not be overstated. And then another reason is that it helps to estimate its useful lifetime, that provides us or an enterprise to set aside provision for that particular item. It also helps one to estimate the scrap value of an asset. So those are some of the reasons. And we go to the third objective, or actually the fourth objective, which is our last objective in this case. We have methods of calculating depreciation, and there are two commonly methods of calculating depreciation. Who can give us one examples of a method of calculating depreciation? Yes, class, are you there? Yes, using a straight metal line is one of the methods, and there is an illustration there, as you can see on the screen, where in this kind of method, we say it spreads the cost of an asset equally over the useful time period of that particular assets, and you find the depreciation value is evenly or equally spread throughout those years which the asset is useful. And another method is a reducing balance method. In this one method, the depreciation is calculated based on the decreasing balance of the net book value of an asset. And we have also the illustration for that, which you can see there. So with this depreciation, we are going to find that in the early years, the amount of depreciation value is higher than the later years. So up to that point, we are going to end, but before we end, we want to review what we have learned today. And we want to review, we have learned about the causes of depreciation. Who can give us some of the causes that we have learned today? Yes, we have got wear in there. Another one? Yes, class? Sam?
We have the obsolescence.
Yes, we have obsolescence. And that marks uh, the end of our session. But before we end our session, I'm going to give you an assignment. And our assignment is discuss on how to do depreciation using the revaluation method. That is another method of depreciation. So in our next class, we are going to discuss uh, on that example. So thank you and may God bless. Thank you.